initial reaction, you get a new government, but given the terms of the bailout, does it make any difference who's in charge right now?
I think it will. What is important, I think, there's a majority government. This is a necessary condition to implement the very difficult structural reform and the challenging fiscal consolidation that they need to achieve by 2013. Remember, they need to reach a 3% deficit by then. And the structural reforms are incredibly difficult. So you need really a strong majority to carry out those reforms.
Antonio Garcia, and it seems actually also that the new leader is not only willing to put everything that he has behind, he also wants to go further in the austerity plans. Is this not dangerous?
Well, they're already, if you look at the medium-term plan laid out by the IMF, the economy is supposed to shrink by 2% in real terms already in 2011 and by 2% again in 2012. So indeed, I think they have to strike the right balance between sufficient austerity and not choking the economy. And I think the fact that the package actually is proposing less of a fiscal consolidation than the previous government was proposing goes in precisely into that direction.
And what about the bond markets? When we've got a firm government in charge, we certainly see the yields come down just a little bit. Is that a longer-term thing, or do you think it's still very dangerous territory?
It's a dangerous territory. I think it's not a clear cut whether that is sustainable. I think if they deliver fully the program, including the structural reforms, they might get away without restructuring. Okay, but it's by no means easy. And remember, there's going to be difficult year this and next year with the economy shrinking. So reform fatigue may come in, as it happened in Greece. So they have to balance a very careful exercise.
Okay, Greece, we have good news. Finally, they got this second tranche of money. But Antonio Garcia, it seems that actually more and more economists are saying, look, at some point, just to get their balance in order, they need to exit the euro and devalue or try and do something, because otherwise they'll just keep on ticking along nicely, or even not so nicely, but just ticking along.
And throwing good money after bad.
I think eventually a restructuring may be unavoidable, but not just yet. I think the contagion risk, in particular to Portugal and Ireland, is elevated to actually talk about restructuring. And hence it makes, in our view, perfect sense to continue supporting Greece. Of course, if Greece continues with the fiscal consolidation and push forward with the privatization agenda, these are two critical conditions, and passing those through Parliament is critical to continue with the EU support.
Now, of course, George Papandreou facing political instability now. That's possibly the worst thing that could possibly happen as far as you're concerned?
It is indeed a problem. I mean, after a year and a half into the program, reform fatigue was supposed to come. In fact, it is coming. Now, they still have majority in Parliament, so they should be able to pass these reforms. And these reforms, again, will be critical. They need to put the country closer to a primary surplus. Okay? Hence, this is one of the reasons also why you might not want to have a restructuring now.
In terms of what we're going to see, is there a cutoff line? You say, right, it's good to keep it bumbling along and talk about restructuring possibly in 2013, but does there need to be a cutoff point, like we've been talking about here on the show, where they say, look, if Greece can't go to the markets in 2013 or 2014, that's it?
I think eventually, of course, unless the EU plans to roll over the bailout on and on, which we don't think is politically feasible, at some point it will be. And obviously, we'll see what happens in 2012, but surely in 2013, by the end of the program, you would expect that some additional decision will be taken.
Antonio Garcia, thank you so much.
Thank you.